Hello, everyone. Welcome once again. Thank you very much for joining me once again. And if you like what you have seen in my previous videos, please like and subscribe. It doesn't take much. So, today, what I wanted to talk about was what I mentioned in my previous video. I want to talk about investing. Okay. Investing is the funner side of finances. It's the side that is basically going to see that what you did before is actually paying off, right? And in the literal sense and in the figurative sense. And before you invest, it's best to clear up your debts to make sure that you don't have the only debts that you should have before you invest. The only debts you should have when you start investing are maybe your mortgage. Um, if you have a car payment, I would try to get rid of that. If you have student loans, if they're not taking too much interest up, you could deal with those for a bit longer because usually student loan debts, I don't know how they are now, but student loan debts for me were that I could pay it in 10 years. So if you're okay with what you're making now and you don't want to put that money in to the student loan debts and you want to use it for investing, it's nice to start off now. But credit card, you got to cut that out. I did a video on credit cards before. Credit cards are horrendous. You do not want to have credit card debt on you because you are just going to be piling on interest, and that is the worst. That is the worst debt that you could have. Okay. But anyway, let's assume that you are fairly well in the sense that you've got no credit card debt, or you pay off your credit cards every month easily, no issues there. Uh, you know, and you have a little extra money that you want to start playing around with. You could start investing. So, before we get into like the whole part of like what you're going to invest in, I'm going to say I am not a financial advisor. I am only speaking from my own experience, okay? And I'm not going to tell you what to invest in. Let's just make that clear. What I'm going to tell you is my experience, what I did, and the same thing that you're listening right here about people telling me on YouTube, I'm not a financial advisor, this and that. That's the same thing I heard. I was the one that chose the path to go. I was the one that was listening to various YouTubers and getting in tune with the companies, what they were doing, getting news about them, understanding where they were going in the future, so on and so forth, to be able to say, this is a company I want to invest in. This is a company that sounds like they're worth it, et cetera, et cetera. Okay. So, with that being said, let's jump into what is investing. So, the definition of investing, okay, when it comes to money, is investment is using money to purchase assets in the hope that the asset will generate income over time or appreciate over time. Okay. And I think that these two things that they are talking about, the asset that will generate income or appreciate over time, we're going to talk about the prime examples, which are real estate and stocks. With real estate, you're going to be able to generate income over time. For example, I own rental property. The rental property I bought a long time ago, and it has done both. It has generated income for me on a monthly basis, yearly basis, whatever you want to call it. And at the same time, it has gone up in value. Okay? So, this is important, and an important asset that I have that definitely is worth having. Does it generate expenses? Yes. But the expenses are less than the income that I am receiving. Okay. That rental property that I bought, the first one, I sacrificed a lot. I sacrifice going out with friends. I sacrifice from having fun, pretty much. I told you last time that I saved every paycheck that I was getting, almost every paycheck when I was living with my parents. I wanted to have my own property. I wanted to live on my own. I wanted to have a bachelor pad, etc., etc. Nowadays, I know that that is difficult to do because so much is going on. Home prices are really high. Interest rates are so. They're still a little high versus what they used to be, right? Um, but the opportunity to own something is still there. Just be very careful what you get, how you get it, when you get it. My understanding is that right now real estate is coming down. In the same building that I own, there have been people that bought for much more than what other people are trying to sell. So the market is correcting itself, right? But that's where investment, carries a risk. Some people, they buy at the wrong time. But even if you buy at the wrong time, it's still an asset because eventually it'll go up. Okay? Eventually, as long as, if you have time on your hands to be able to sit on something, if you're a young person, you can still do this. If you are an older person and you just have cash to buy it and you don't mind, you can probably get a property for less amount. But I'm not here to talk about real estate in that sense. I'm here to talk about what investments are. So I said that it does carry risk. So some people would probably say, so is investment like gambling? And that's where I say no. Investment is not like gambling. It does carry some amount of risk, but let's, for the sake of it, let's look at what the definition of gambling is. Gambling is the act of risking money or something of value on an event with an uncertain outcome in the hope of winning more money or a prize. Okay? So gambling is like you going and saying like you have two football teams, and you saying that, oh, I think the Miami Dolphins are going to win versus the San Francisco 49ers or whatever, that is absolute gambling. Obviously, you probably, if you're a sports buff, you probably have statistics on both teams and you can determine, oh, these guys, this is an easy win, whatever. It doesn't matter. Gambling is not good, man, because although some people have had luck with gambling, there have been too many people that have just lost their shirt with gambling. Gambling is taking over our country. There's too many gambling apps, that whole DraftKings and BetsOn, and I mean, I don't know if BetsOn is in here, but there are just too many gambling applications all over, and it's Hard Rock Bets, etc. Too many people are trying to make a quick buck. Too many people are trying to just, continuously, they have this vice that's like just really bad. It's a poor judgment on their part to think that gambling is going to give them something great. And then you see people with gambling addictions and all that, and it's sad. Gambling sucks. Usually gambling, I don't do gambling. The most that I've done in gambling is buy lottery tickets, where I've spent like $20 because the price is so big. But that's like once in a blue moon. I don't really do that much. Once in a while, I say, hey, I'm gonna buy a lottery ticket. I spend like $3, $4, $5, and then when I see that things are like really big, I just do a splurge, you could say, and I get $20, $10. Sometimes I even feel bad doing the 20 because it's not, your odds of winning are just so slim. It's not worth it. But anyway, gambling, no bueno. So when you think about it, think of investing being long term, gambling is short term. Okay, that's why you have stock traders. These guys are professionals that Sometimes they know what they're doing. Sometimes they don't. But these investors, they basically are taking a chance on a company to either go sky high or to crater, and they're just gambling, and they're doing other crazy things like puts and options, which I'm not going to get into in this video. And frankly, I've never done. But I've heard of people making money off of that. But it's a gamble, it's a gamble. So gambling is super high risk, and investments they have risks, but they're much lower. Okay. So when you invest, you run the risk of losing money. Okay. But what you want to do is you want to make intelligent decisions. These intelligent decisions are based off of like, how has the company been performing? What is the company selling? Is the company outpacing its earnings? Are the revenues closing a lot? Like, I personally am invested in a company, in various companies, but in this company in particular that has been doing amazing in terms of obtaining new contracts and things. And they've been talking about this on their earnings calls, and they've shown it on their financial statements. Their revenues are exceeding their expenses, and you want to be able to see things like that. And it's not just those things, it's also their operational expense. How much does it take to operate? And we could touch upon those things a little later, when we get into the more details. And this is where the boring stuff of investment comes in. You got to do some reading, you got to do some homework, you got to understand how a company is functioning, so that you could say, I'm going to give you my money so that I could tell that you're going to give me some money back, right? And that's how you're supposed to do it. Because if you just blindly give a company money, you're most likely going to lose it. You can't just you just don't blindly give your money up to anyone, so might as well not give it up to them. So just understand, risks are everywhere. When you take risks into getting a new job, it could be risky, depending on how amazing of a star you are and all that. But still, it's a risk. What if the company flops and it goes down? If you get married, that's a risk. You don't know if your partner is going to turn around and then file for divorce on you, and then screw you over. Luckily, that has not happened to me. Thank you. My wife and I love each other a lot, so it's a good thing. Buying a car, a used car, that's a risk. A new car could turn out to be a lemon. And, so just giving examples that risk is everywhere. Okay. And simply what you want to do is you want to lower your risk. You know that when you go and buy a house, you do inspections on the house to be sure that you're going to buy something that's still sturdy, doesn't need too much to be changed, etc. So you just want to use the tools that are available to be able to lower the risk. And the tools in investing, especially in the stock market, are financial reports, financial statements, news that is coming out. What new things and innovations is the company getting into? Things like that, and that's going to give you an idea of where the company is headed in the future. So the other thing that's good to know about investing is that when you invest, because it has some sort of risk to it, the number one thing that I heard from somebody was that saying that investing should be used with money that you could part ways with. You don't need this money. So you have this extra cash there. It's not your emergency fund. It's not money that you need to pay for your rent or your mortgage. It's money that that if you lose this money, you're okay with, and you could do without it. Obviously, nobody wants to lose money. Okay. I don't think I've met a person that says I don't care about losing money. So it's definitely something that you have to think about. Why do I think that that's a golden rule? Simply because investments are stomach churning at times, okay? Especially if you're starting to invest. Investing is tricky in the sense that um, when you start to invest, you start to see, let's say that you put in $500 and this was money that, you don't want to risk losing, or 5,000, whatever it is. But you suddenly start seeing that the stocks or the stock that you invested in, it starts to go down. You start to panic. I'm going to lose the money. Like recently, there was a crash in the market. Okay. I have money in the market. The stock went down. Many of the stocks that I have in my portfolio went down. What did I do? I didn't do anything. I didn't sell. I did say, oh shit, I should have sold. But at the same time, I told myself, I've been through this many times already. I shouldn't panic. Relax. And that's what happens. You have to have a stomach for it. There's a YouTuber that I follow that basically he says that a dead person's portfolio uh, outweighs, or no, wait, horrible. I can't even say it. Something about that a dead person's portfolio performs better than a live trader. Okay? Because some people that just buy these excellent stocks and they leave them there and they pass away, or they don't touch it, the portfolio keeps on going up, right? So that's something that could be kept in mind. But I'm not saying for you to just invest and leave the money there and don't touch it. That's not what I'm saying, because that's not what should really happen. At the end of the day, you should have, you should have the ability to take profits. But that's something that we can discuss even further later. It's not a, how could I say this? There's no golden rule of when you should take profits, but you can make your rules up of when you want to do that. But anyway, the whole point is that investments, they do have some risk, and you want to be able to have a strong stomach for it. And I'll give you an example of what happened to me when I was investing. Okay. And I'll give you like one of the most volatile investments that I made I bought Bitcoin. And Bitcoin, I was super skeptical about it. And still to this day I am, because Bitcoin doesn't really have any value. What I see is like Bitcoin is just like a bunch of people just putting money in it. There's a huge pool of money. It's like a gambling pool. that's gambling kind of to me. And it just fluctuates up and down, up and down, up and down. I know that Bitcoin came to a point where it was like in the hundreds of thousands of dollars, but I think the peak was like 120 or something like that. But it crashed recently. It went down to like 60 something, I believe, or 50 something. So it lost 50% of its value or whatnot. So because Bitcoin to me is not something that I could measure its value with something that's tangible or some sort of asset, it's just a lot of people putting in money into a pool, like I mentioned. I prefer to stay away from it. I know that I made a video where I invested, and I could show you guys the numbers, and you guys let me know if you want to see the numbers of when I started investing in Bitcoin, how much I put in. But if I would have kept it there, it would have grown immensely. But I just don't like the risk. So that one, I couldn't stomach it, right? So that I put aside because I just didn't like it. I didn't like the fact that, it would go to 15,000, then it would go back to 2,000, and then it would go up to 6,000, and then it would go up to 20,000, and then it went back down to like 15,000. It was just too crazy for me. I was a skeptic. I was nervous, and it was the beginning of my investment time. That's when I started. So I just said, I'm I'm not going to do this anymore. It's just too nutty. I don't want to deal with it. But the whole thing with investments is that you got to be firm. You got to have a strong stomach. The money that you're going to put into investments is something that you can do without. You don't mind if it's gone. Like, it's not going to ruin your life, okay, if it's gone. Um, and to invest in good companies, you have to understand their finances. You got to listen to the quarterly earnings. And I guess this is little bit of the boring part. People don't like doing these things. They like somebody else telling them what to do and whatnot. Um, and it sometimes frustrates like people that are just explaining these things because you don't follow the direction that they're giving you. The other thing is that you could do is what I did, and I'll tell you what I did. I followed YouTubers' advice on investing. I found like 3 or 4 or 5 uh, very prominent YouTubers, and I noticed that they were talking about the same companies. I noticed that they were giving almost the same advice. I noticed that they had different outlooks on the companies that they were talking about, but at the same time, I made my own decision. I made my own conclusion, you know, um, and I started investing with their help. Okay, and as I started investing with their help, I noticed that the advice that they were giving was working. The way they were talking about the companies, the outcome was actually real. What they were saying. So this is something that you can do, and it was free. It was free, and a lot of these guys, they do have like, oh, come into my academy, they call it, or come into my club, or whatever it is, and you pay thousands of dollars to get into that. If you're a person who has that money already, find a good one, find one of those good guys, and you could put that money in there. But if you're starting out, do not do that. Follow their free advice. Their free advice will actually help you, and I say that because it helped me. So I was able to generate a nice amount of money with their advice and what they were saying and the free things that they were talking about, about dollar cost averaging, which is DCA, um, and just understanding how it is that you're supposed to invest. Let's talk about DCA for a little bit because that's a really interesting one when you're investing, okay? DCA is dollar cost averaging, which basically means that you're going to put money into a stock or a portfolio every so often. It could be every week, every month, every 3 months, whatever it is that you desire, okay? The more consistent you are about it, the better it is. And I don't mean that you have to buy like 10 shares every time or 5 shares every time. No, it could be one, it could be two, it could be half of a share, whatever it is that you have the money to be able to start putting it in. The stock is going to fluctuate. It's going to go up or it's going to go down. When the stock goes down, you buy a few more shares than usual. When the stock goes up, you go back to buying your regular shares. That's the gist of DCA, okay? Of dollar cost averaging. That's what you're basically going to do. And the best way to think about that, that investment, that investment of the DCA method, and the way that I thought about it is that it is a savings account. Okay. Why do I say savings account? Because basically you're getting this money and putting it into a stock that you're just leaving in there, and it's going to eventually mature, grow to a good amount, right? But it has to be with a good company. Okay. Has to be with a good company. Um, you, after doing your research on a company, you're going to be able to understand that the company's not going anywhere. For example, an Apple, Amazon, Google, the Magnificent Seven is what they call them, right? Facebook. Those companies aren't going anywhere anytime soon. Those companies continue to generate revenue, continue to beat their expectations. They don't win them all, okay? But when they don't win them is when your chance is to invest a little bit more in them because you're starting to get that company at a discount. Right now, it could be that the stock market, people are saying that it's overinflated and so on and so forth. It could be true. It could be true, definitely. Um, so maybe you don't want to put in that much money into a company, but put in some, because what if it's not? What if it just keeps on going up? When we look at the stock market charts, when we look at the S&P 500 and just the Dow Jones Industrial Average in general, it's it's a it's a continuous climb. And I'll put the chart up. You'll notice that it's a continuous climb. It has its craters, okay, during its downtime, the crash of 1929, the dot-com bubble, and then it was the housing crisis. Things happen. But if you notice, your money is going to be safe. It depends on when you have to take the money out. That's where the trick comes in. But if you're young, if you have 20, 30 years to be able to play in this game, even if you have 10, that's still a good time for you to be investing. And when you invest, just make sure that you're investing into something that has value, you know? Make sure you invest into something that has value. Something that it's going to be difficult for it to go down. These companies that I mentioned before, it's like they're going to be solid regardless. And the only way that something terrible could happen is if, there's some very catastrophic thing. And even when we had COVID, where everything was shut down, right? And the world just stopped for a bit, when everything cratered, that was an excellent time to buy. And it's something that you learn with time and with doing this. I've been investing for about 10 years now. So I've seen a couple of things that have happened where things have cratered, and I've been able to buy in a few stocks and then they just pop, right? And I'm not going to say that I've done it where I've become, I've made millions off of it. No. But I've done it where I've been able to have a safety net for when something crazy like getting laid off happens. So, having said that, I would love to continue telling you about my stories of investing and all that. But before, one main thing that I want you to get out of this is that this is the funner part of the finances, okay? And there's the opportunity to make a lot of money. But this is a game of patience. This is a game of time. That's why I'm saying if you have a lot of time, investing is for you, okay? If you have 10 years or more, investing is for you. Even 5 years, investing is for you, because you can make something with very little. And I could share with you some of my experiences, how much I've invested into something and how much it's grown. But I really do feel that you have to have patience. This is a game of patience. This is a game of long term. This is a game where you just have to have the patience, the stomach, and the time. Okay? And you'll see and you'll notice that it's going to pay off, literally and figuratively, at the end. So, with that being said, I really want to thank you. And if there's anything that you want me to, if there's any questions you have, please feel free to drop it in the comments. I'd be happy to touch upon those things maybe in my next video or something. And at the same time, uh, if you like what you heard, I can't even speak anymore. If you like what you heard, please like and subscribe, and I look forward to putting out more of these videos. All right, take care.